your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at some of the company news we're following. The blank check deal that brought Donald Trump's media startup public, set to give him another $1.3 billion in stock after meeting certain targets. Still, he remains unable to cash in on any of it. The former president and insiders set to receive 40 million shares of Trump Media and Technology Group to split as soon as today's close after they fulfill terms related to the so-called earnout. 36 million of the additional shares earmarked for Donald Trump. Even as Trump and other insiders' paper wealth grows, they're currently unable to sell any shares until September. That's because of the lockup related to the deal. I want to check the share price. DJT right now down 8.2% just before the close. Elon Musk's social platform X launching a TV app, pushing deeper into video and entertainment content, taking on the likes of Alphabet's YouTube. X didn't confirm a date for the platform's release, but said it would be coming soon to most smart TVs.
What was that?
They're launching, well, you got to listen. They're launching a TV app, X is. X didn't confirm a date, as I say. Additionally, the company touted the ability to cast video from smartphones to bigger TV screens. And a new presidential helicopter, it's been demoted to backup duty. Lockheed Martin, the maker, still can't figure out how to keep it from scorching the White House South Lawn. This is the VH-92 Patriot, landing now only on paved runways now because of this problem. I don't know about you, but if I'm going to get a helicopter, I want one that shoots out flames and scorches the lawn that I'm landing on.
Fair.
What are you, like one of the Avengers or something?
It's cool, I think. That's your company news.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. That's Carol Massar. I'm Tim Stenivek, and I kind of want to continue on this chopper talk.
With Avenger John Tucker, who wants to be in a copter that's like...
Chopper.
Chopper.
Yeah, the VH-92
Do we
is what
have
you're
a
talking
company
about.
chopper here?
I don't know about you, but Tim and I do.
Yeah. We'll give you a ride on it sometime.
If you're nice to us.
This is...
that would be a no, John. No. We fly commercial.
This is Marine One, which is the designation you apply to a helicopter when the president is
the one we
on.
always see on the White House lawn.
Yeah,
but this one is not the one you see on the White House lawn because it scorches the lawn.
Yeah, well, anymore, right? They've banned it.
Right. So it's only landing on paved runways. This is the VH-92. The problem is not new. It was an issue that was first identified back in 2018. The spinning rotors and engine exhaust sometimes scorch the grass where it lands.
Yeah, not a good thing. So for the time being, the helicopter doing that job now for the president will remain the VH-3D Sea King. I always love the names of these things.
Oh, the Sea King.
I'm getting on the Sea. Honey, I'm going home. I'm getting on the Sea King. That's what you do. That's what John does to go home.
The Sea King. No, I'm on a boat. I take a ferry boat. The Sea King,
Hence
I guess.
the Sea King. But it's interesting. The VH-92 built by Lockheed's Sikorsky unit. So, of course, we know Lockheed reporting earnings today.
Okay, so here's what a Lockheed spokeswoman told Bloomberg News, Melissa Chadwick. She said, quote, "We've been working in close collaboration with our customer, i.e. the White House, and have an agreed upon landing zone solution with testing plan to validate and ensure the aircraft meets that specific operational requirement."
Yeah, according to a White House official. What?
I.e. we're working on it.
We're trying not to burn the grass, basically. Did you ever have, like, when your dad growing up, like, you know, like, don't, like, you put, like, a blanket or something or a towel, it's like, you're burning the grass.
Well,
like, after, like,
be
swimming.
a guy who runs
Okay.
up, puts a blanket down.
Well,
for the
according to that
helicopter.
point, according to a White House official who asked not to be identified discussing private conversations, engineering and design work is underway to see if fixes can be made to prevent grass damage under hot environmental conditions when rotors are turning.
I'm not crazy.
You're not. I never said you were.
I am a little bit, but I kind of know this stuff. All right, John Tucker, thank you so much. Great story. I just want to take a quick look at shares of Tesla. They're up about 1.8% here. This could be the big earnings after the closing bell. We also get Visa. We also get Texas Instruments. So, folks, we're going to be breaking down all of those results. Right now, we're heading over to our TV colleagues. We'll check in with John a little bit later on. But right now, it's Beyond the Bell, starting right now.
Beyond the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Sonali Basak. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast. Carol Massar and Tim Stenovic joining us right now as we welcome our audiences across all of our Bloomberg platforms as earnings season really gets into full swing. Quite a few set to cross after the bell tonight, including Enphase, including
Tesla.
Chubb, including Steel Dynamics,
These are not
including
names of
Mattel,
Tesla.
and including Visa,
Including
and oh
Tesla.
right, I forgot that one, Tesla.
Who's your favorite child, Romaine?
Tesla. Stock is up 1.8% as we say. It's off its highs of the session, but we saw a rally in Tesla shares today. And speaking of rallies, guys, the S&P 500 now up 2% in the past 2 days. So
Okay.
different tone.
So we're awaiting Tesla. We spoke to Nancy Tengler over at Laffer Tengler Investment. She was just in our studio, and she said, we think a lot of the bad news is already priced into Tesla, and they could actually be adding to their position. They added at $180 a share, right now at $144 a share. So she acknowledged that she got in a little early.
Well, it's interesting, too. You have a lot of analysts that are still having price targets that are way higher, above 220 or so. So, of course, there is some buying appetite out there. The question is what gets it there?
Yeah, I mean, what gets it there here? I mean, let's walk you through the numbers here because we're looking at analyst estimates right now of adjusted EPS of about 52 cents a share. That's a massive drop year over year. And even on a revenue basis here, we're looking at something around $22.3 billion if you believe analyst estimates. That would be a 4% decline here. And it's been quite some time. I have to go back and look since we had a quarterly decline in revenue over at Tesla. Let's get you the closing bell numbers ahead of the earnings here. Green across the screen for the major indices on this Tuesday afternoon. It takes a while for these numbers to settle, but you see it there on your screen. The Dow Jones Industrial Average up more than 260 points, or about 0.7%. The S&P higher by roughly 60 points, or 1.2%. The Nasdaq Composite going to close out the day higher by more than 200 points, or about 1.6%. And look at this. Cyclicals and small caps getting in on the party. In fact, that was your outperformer on the day. The Russell 2000 higher by 1.8%.
Yeah, and taking a look at the S&P 500, most of the names in the index actually higher today, Sonali, about 388 names posting gains in today's session. And you've got about 111 to the downside, 4 unchanged.
It's interesting. You looked at sectors, still broad-based gains across those sectors here. Communication services, information technology leading the way, though you did have a strong bid in industrials and consumer stocks as well. Healthcare also up more than 1% on the day. Materials really your only loser on the day today, guys.
All right, real quickly, guys, as we await those earnings to cross, Tesla shares, as I mentioned, up 1.8% in today's session ahead of their earnings, still down more than 40% year to date. So sentiment obviously very negative here in 2024. Globe Life, ticker GL, #1 gainer in the S&P 500.
What?
I know, an insurance company raising its operating earnings per share forecast for the full year, and the gain extending a bit of a rebound from a record drop earlier this month in this name following that short seller report. So #1 gainer. Do we want to do some earnings here?
Texas Instruments crossing the wire right now. Is that
do
what
it.
you're looking at?
That's what I'm looking
All
at.
right, well, let's do it here. Revenue coming in the first quarter at roughly about $3.66 billion. We'll round it up to 3.7. That would be a beat over street estimates of 3.6. EPS coming in at $1.20. That's versus $1.85 in the prior year here. So a bit of a drop there, though it does look like it came in above estimates. Here's your forecast going forward. 2Q revenue, the company guiding $3.65 billion to $3.95 billion. The street was looking for 3.8. Here's your guidance on EPS. $1.05 to $1.25 was what Texas Instruments is guiding for. The street was looking for $1.17.
Not getting a ton of commentary, at least in the press release at this point. Just going over the numbers, revenue decreased 16% from the same quarter a year ago, 10% sequentially. Revenue declined across all end markets. This according to the company's president and CEO. Also saying that the second quarter outlook is for revenue in the range of $3.65 billion to $3.95 billion. Earnings per share between $1.05 and $1.25.
Now, I also want to bring you some news over from Goldman Sachs. Goldman did hit the first record high since 2021 here. The shares have risen 1.6% here. And you have some interesting movements there on a day that you really have no interesting news, frankly. Yields are on the decline again, so maybe that's pretty good for markets.
Maybe says something to sentiment, like overall, right, that we've seen certainly over the last couple of days. Just watching, though, Romaine, shares of Texas Instruments on that outlook. That stock now up about 5.8% here. So investors moving it, as we said, sees second quarter revenue $3.65 billion to $3.95 billion. The estimate on the street is $3.78 billion. So investors definitely driving this one, although we're bouncing around a little bit, but still, for the most part, much higher here in the aftermarket for a stock that hasn't done much this year, down about 3%.
Yeah, absolutely here. But of course, a lot of people look to this, not quite in the zeitgeist when it comes to AI and chips overall, but it does give us a little bit of a peek here into one corner of that market, particularly because we're going to have to wait, I think, like another month before we get NVIDIA.
Yeah, exactly, right? And that's going to be a big one, right? That AI bet. Tesla shares, guys, just starting to cross the Bloomberg terminal remain.
All right, let's get you those numbers right now. Tesla crossing the wire. And let's go right to it here. The company coming in, EPS coming in at 45 cents a share. The street was looking for 52 cents a share, so a bit of a miss there. And remember, that bar was lowered significantly here. We have to look a little bit deeper into some of the numbers. As some of the commentary coming out right away. The company's saying that it's updated our future vehicle lineup. They're also saying that they still see notably lower volume growth rate for 2024, but it does plan to accelerate the launch of new models going forward. Now, I should point out, we had a chance to catch up a little bit earlier with a couple of analysts, and they were talking about just this here, that yes, this quarter was going to be bad, but what they really wanted to hear, guys, was what is the pivot? What is the identity? Are we going to see a ramp up in production? And more importantly, in which vehicles?
Yeah, so let's, again, seeing the stock up about 6% in the aftermarket. We know sentiment has been really low. So again, first quarter adjusted EPS, guys, 45 cents a share. That is light. The street was looking for 52 cents. First quarter revenue, also light, $21.3 billion versus an estimate of $22.3. But again, looking to accelerate the launch of more affordable models. That's going to be key because that's been a pivot, or at least a tone, it felt a pivot in tone, if you will, from Elon Musk, that maybe it was backing off of a more affordable Tesla model, which would reach, as you know, Romain, a much more wider audience.
And wasn't this the big issue, right? Because when that report, I think it was Reuters, was one of the first to kind of report that Elon Musk was backing off of that, and then he came out on X and said, no, that's not true. But he's still got to articulate a strategy because we've seen the results here, not just in Tesla's numbers, but when you look at the competition from some of those lower cost or lower price Chinese models, and even some of the lower price U.S. models here, we see where a lot of that market share is going.
Well, I'm going through the deck right now for the 2023 update, the quarterly update deck right here. And it's 31 pages. The company's saying that they experienced numerous challenges in the first quarter. They cite the Red Sea conflict, the arson attack at the Gigafactory, the gradual ramp of the updated Model 3 in Fremont. Their COGS per unit, though, declined sequentially, driven primarily by lower raw material costs. The company also saying, talking about the autonomous and electric future, it's saying that we believe scaled autonomy is only possible with data from millions of vehicles and an immense AI training cluster. We have and continue to expand both to make full self-driving supervised more accessible. We reduce the price of subscription to $99 a month and the purchase price to $8,000 in the U.S.
It's interesting. When you look, you do have them missing estimates, as Carol was saying, not just on revenue, but vehicles sold as well. But investors, if you take a look at the stock, so far, shaking off the numbers themselves and looking at that update, the update also walks you through a lot of the sequential declines in volumes due to a lot of the issues around the world, shipping diversions caused by the Red Sea conflict. And to your point, really guiding investors to the future here towards artificial intelligence and also the deployment in capital that they're willing to put forward.
And this is what Tesla does, and they do it great, basically trying to guide towards that future. But I do want to just focus real quickly on the here and now, because when you go through some of these numbers in that most recent quarter, they were awful, and they were actually a lot worse than what some folks talked about. We talk about Model 3 production at that Fremont factory, down sequentially as they changed up the lineup. They talk about the production at that Gigafactory in Shanghai, down sequentially once again, although they do expect demand to improve later in the year. Model Y production in that Berlin factory, down sequentially here. Well, you get the picture here. So the question isn't so much longer term, do they make that up? The question is, how long term is that going to be, Carol?
Well, it's always timing, right? How long it takes. And I'm looking through the deck too. In 2024, Tesla says our vehicle volume growth rate may be notably lower than the growth rate achieved in 2023 as our teams work on the launch of the next generation vehicle and other products. In 2024, the growth rates of energy storage deployments and revenue in our energy generation and storage business should outpace the automotive business, which is something we were talking to Nancy Tengler about. Was it the battery? But the battery business and the importance of that actually to the Tesla story that doesn't necessarily get a lot of attention mentioned. Hey, one other
Right.
metric, first quarter gross margin, 17.4%. The estimate was 16.5%. So that's coming in better than the street forecast.
Page 10 on this presentation, I think that this is a bit of the money area that a lot of investors will be looking at here. This idea of the lineup for the new models accelerated ahead of the previously communicated start of production in the second half of 2025. These are the new vehicles, more affordable models that they're looking to bring to market faster. And they do talk a little about the robotaxi here, continuing to pursue a revolutionary unbox manufacturing strategy. So that is the outlook. That is page 10, right before you get to the market share here. But it does come right after they lay out all those challenges ahead.
Isn't this important? If they're committing, it feels like a fair amount of time and like making a point to talk about the launch of more affordable models. As we talked about Remain earlier, the reports, the back and forth of like, are they not going to do this? This is so important to the story going forward.
Yeah, absolutely, Carol.
All right, guys, we got to wrap. I know you guys got more on your side, but we are seeing shares of Tesla definitely rallying in the aftermarket. All right, that's across platform, radio, TV, YouTube, Bloomberg Originals, breaking down, of course, those Tesla earnings. We will see you again, same time, same place, tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, well, shares of Tesla are higher in the after hours right now as investors continue to digest those first quarter earnings numbers. Global vehicle inventory rose to 28 days. It's a huge jump from the 15 days at the end of last quarter. Shares higher right now by just about 5%. First quarter revenue coming in at $21.3 billion. That was below estimates of $22.3 billion. Also a miss when it comes to EPS, adjusted EPS, I should say. That coming in at 45 cents versus estimates of 52 cents.
Shares of Tesla up about 5.5% in the aftermarket, but also Tesla to accelerate the launch of more affordable models, like getting a red sticky by our team here at Bloomberg. All right, so let's get to it. With us, Ross Gerber, President and CEO at Gerber Kawasaki Wealth and Investment Management, and also Bloomberg Business Week columnist Max Chafkin. Ross out there in Santa Monica, California. Max here in our Bloomberg Interactive Broker Studio, getting ready for another round of Tesla Bingo, which we'll get into in just a moment. Ross, investors like it. What do you make of this report, looking backwards, looking forwards?
Well, I think the good part of the report, because this is really the only good part of the report, is them saying that they're going to accelerate the production of this next-gen vehicle platform. And they were pretty vague about what they're calling this, or what robotaxi is, or is a Model 2 coming. And I think that'll be clarified on the conference call. So, once again, we don't really watch after-hours trading because it really doesn't represent all the participants. And we haven't seen the conference call yet. So we'll see how the stock trades over the next several months. But there really isn't any other good news in that report other than them saying they're going to accelerate production, even though they just fired all the people that are in charge of accelerating production.
Hey, Ross, remind everybody, take a step back here, because Carol and I were looking at the terminal earlier. You are a longtime Tesla bull until you weren't, and you were a longtime believer and have been a longtime believer in the company. You guys still own a substantial number of shares over at Gerber Kawasaki, but what is your position right now in Tesla moving forward?
So my position is that Tesla is a wonderful company that has enormous potential, with a CEO who has become so divisive that people won't buy the cars. And that's why saying you're just going to produce more cars doesn't address the real issue, is why they're not selling cars today. And that's the issue that needs to be addressed that isn't being addressed. So as a shareholder, we have to assess what the future earnings potential of a company is based off what their business model is. And when we started investing in Tesla over 10 years ago, and we've had a great run up until the purchase of Twitter. And so we've been lowering our position because what we feel is that Elon's behavior has hurt the brand in such a way that consumers actually don't want to buy a Tesla. It's just the best car on the road at the best price. So people buy the car reluctantly at this point. So I think, we've got these problems to solve, and I'm not sure if that will be addressed on the conference call today. And that's, and I don't like being called a Tesla bear, because I actually think they could turn the company around pretty quickly if Elon changed his behavior and stopped attacking everybody. But I just don't think that's going to happen. And so I think the bigger issue that isn't being addressed is, it doesn't matter how many cars Tesla makes if nobody will buy them.
All right, so Max Chafkin, come on in. You guys do the Elon Inc. Podcast. You're constantly looking at what he says, what he does. You're looking at his assets, his portfolio. Your initial thoughts on kind of the headlines we got from the company.
Just to kind of underline, Ross is saying something like this, but like the note about the new products is very vague. It doesn't say we're going to have a Model 2 and it's going to come out on this date, which is what many investors had been hoping for. It sounds like it's saying, if I'm reading it correctly, they're going to try to essentially make the current models more affordable. Now that obviously could allow them to sell more cars, but it's a slightly different spin on things than what many people have been expecting. The other thing is, as Ross is saying, on a Tesla earnings day, what Elon says, and more importantly, how he says it, is just as important as what's in these numbers, because he is going to hopefully, anyway, clarify some of this. We'll also hopefully get a sense of like where things stand with robotaxi, where things stand with potential affordable cars, and investors seem to react to based on his optimism. A couple quarters ago when he was in this kind of dour mood, we saw the stock go down. So it's like, do we get an optimistic version of Elon or the kind of very dour, pessimistic Elon?
Well, I wonder if you have a question for Ross, Max.
Yeah, Ross, what is your reading on this product, on this paragraph about the product?
Well, I think you're dead right about the two things you just said. Number one, they're of course vague because of the legality of it if they put this down and they don't do it, right? And since nobody seems to know what Elon's going to do, and I'm sure that everybody understands that nobody within Tesla knows what the business plan is either, because they just don't at this point. But I think secondly, a lot of it will be, how does Elon answer these questions from investors during the conference call? And what you said is right. If we have sort of a very positive Elon and he's refocused and he's going to be working at Tesla more, and he can play the room right. Maybe we get a little rally in the stock, but it doesn't change the fundamentals. If he doesn't play the room right, this becomes a bloodbath. So, I'm just hoping that he understands the damage that he's done and starts to mitigate this versus diving in and sort of doubling down.
It will be interesting to see if Twitter comes up, or X comes up, because there is this question and this sense that he's spent, gee whiz, a lot of time talking about X, tweeting about X, doing X-related things. There's even a potential, they're going to have a Grok integration inside of the Teslas. And I think that to people who are really bought into the EV story rather than the, Elon Musk genius story, which those are two important constituencies here, I think, for Tesla stock, they would like to see him spend less time on his social media network.
Yeah.
Well, it's not just less time, it's what he's saying. It's like, it's not the time, it's that what he's saying oftentimes is super divisive and basically racist. So it's like, it's really hard to sell products to people when the CEO says things that are really hurtful to people, including me for that matter.
No, and we've talked with you about that. Absolutely. Ross, what could Elon say on the call, or Elon and company say on the call, that would make you more excited about the company, or once again say, kind of, oh, Elon, really?
Well, if I had my dream come true, he'd say, I'm coming back to work at Tesla, because he basically doesn't work at Tesla. And he would say, I'm done tweeting all this garbage in politics. I'm going to really focus on advancing sustainable transportation and energy, and that we're going to release this lower, priced car. And the strategy that we all bought into 3 years ago, and the stock was at all-time highs and earnings were going up, 50, 100% a year. It was like a different world than today. And it's amazing to me he doesn't understand this difference that really is his responsibility. And so as a shareholder, I have to say it's an extremely distressing time, because the valuation of Tesla is premised off all these great technological innovations, none of which have come to fruition yet. So his focus is 100% what needs to be happening right now.
Hey, Ross, I do want to just end with one last question about the cost of producing these vehicles. It seems like Tesla is doing everything it can to bring down the cost of producing these cars, the cost of goods sold too. What numbers do you want to see there?
Well, they are, but their margins continue to go lower. If you look at the report, which I've only had a minute to look at, their vehicle margins continue to go lower, their operating margins go lower, their net margins go lower.
Yeah.
So they're able to lower the price of the car, but what they're not able to do is keep that going as fast as they're lowering the price of the vehicle. So it's still hurting them, even though they're lowering the cost of the car. And it does bring in a bigger market, but you're not creating any demand. And this is, I have said it 100 times, every company in America advertises for a reason. People need to know why your products are superior. And all the Tesla people bought in Teslas, so all these YouTubers can tweet all they want, but everybody who wanted a Tesla bought a Tesla. So you got to get new customers. And the new customers are being told that charging sucks and EVs are bad and this and that. And Donald Trump says they're bad. And this is all they see all day. And then it's like, why would they go buy a Tesla? Because there's not one ad anywhere that tells you how great the cars are, because they are great.
Right. And you still own them, right? Real quickly, yes or no?
Yeah. I do. I just don't understand why they don't tell people how great their vehicles are.
All right, Ross Gerber, so appreciate it. We know you've got to, I think, run over to our TV guys. President and CEO Gerber Kawasaki, so appreciate you joining us. Max Chafkin is staying with us at Bloomberg Business Week, and we want to roll into the conversation. Ed Ludlow.
Yeah, he's co-host of Bloomberg Technology on Bloomberg TV. He joins us from the San Francisco Bureau. I do want to note, Carol, that Tesla first quarter automotive gross margin, excluding regulatory credits, was at 16.4% for the quarter.
Stock up 6.3% in the aftermarket.
Hey, Ed, come on in here and explain why you think the stock is moving higher, given that a lot of these numbers came in below estimates.
Yeah, I think that the print and the numbers in after hours have nothing to do with the quarter gone. Everyone's looked past it. Frankly, what the shareholder deck outlines is almost line for line exactly what Dana and I outlined in the big take on Sunday, which is on the affordable EV, a big body of work had already been done at the component and production process level. And Tesla is moving forward with a more affordable lineup of EVs based on that technology. It was really misunderstood. It's like the world was banking on the Honda Civic of EVs and Tesla to be the one to bring it. But my understanding from sources, that was never the case. And if you read the shareholder deck, they spell it out pretty clearly. They've looked at this kind of more holistically, and there will be more affordable EVs coming late 2025. Caution, caveat, Musk is also often misses his own deadlines. You know that I always say that. But it's like a something for everyone. Yeah, you know that. And
Just kidding.
that was me protecting myself from all the people who may go after me on social media. But explicitly it states that they are working on a purpose-built robo-taxi. And so we went into this saying, if you're a Wall Street institutional giant who really wanted to see an affordable EV, or you're the technology investor or the retail investor that's kind of all in on the Tesla thesis around autonomy, you got that as well. And really, I think the market are joining in hands to play that in after hours.
The question is, like, what is an affordable EV? And I think one of the ways that Elon Musk could clarify is to sort of say that. He, over the weekend, amid all this speculation, he tweeted a screenshot showing the Model Y priced at $29,000, which sounds pretty affordable. Of course, that includes tax credit, which not everybody gets, and like a $5,000 sort of assumption of gas savings. So like, you could imagine a situation where he tries to argue, like, look, we're going to cut a bunch of costs out of this thing, and we're going to make it affordable as is. Like, we don't need an additional model, which is a really intriguing proposal that is a huge, pretty big departure from how the car industry normally does things. And in certain ways, like Ed is saying, maybe not that surprising, right? That's kind of, Elon Musk has long modeled this company after Apple. Apple sells a very, modest product line. All the products kind of look the same. They're all kind of expensive. You could sort of imagine his effort to do this. And who knows if it's going to work, but it definitely is outside of what, a normal sort of car company, normal car company analyst would expect to see, would want to see.
Guys, I'm looking at our live blog, Corey Cantor weighing in, our BNF electric vehicle analyst, and saying, where he talks about these new models and talks about I don't know, new models ahead of our previously communicated start of production in the second half of 2025, accelerating that launch. He writes, by including these statements in the investor deck, it shows Tesla has identified that a lack of new models is a problem, but are there actually actions being taken or just a continued lack of clarity? And I guess, you know, I'm going to go back to you, Max, for a second. It feels like, right, we want a little bit more specifics, right, on what this means.
Yeah, again, it does have the feel of a deck that's being written for maximum optionality, and you know, this is all happening very, very quickly. You know, we've seen Elon Musk get re-engaged, it appears, in any case, you know, conducted this layoff in a way that has seemed, at least according to, you know, the reports that Bloomberg has published, that Ed has written, very hasty. And so you do wonder, like, maybe they are trying to figure this out as we speak, and who knows if we're definitely going to get that level of clarity on the call from Elon Musk. Although, given Elon Musk, like, he cannot help himself but sort of say controversial things. You know, he's got that sort of Trump characteristic of being sort of really, really honest, sometimes to a fault. He may, you know, spout something off that could send the stock in any number of directions.
Ed, to that point, you know, what are you looking for on the call, Ed, if you're when you're tuning into the call?
So I don't want to be inconsistent. You know, I posted in the blog before we kick things off, clarity. But actually, to be fair, I think that Tesla has given us one single line of clarity. So I'm just going to read it. This update may result in achieving less cost reductions than previously expected. So Carol read out the section in which they outlined the explanation. There will be multiple affordable models. But I think that the market, and indeed because Elon Musk kind of guided us there, was thinking this will be a brand new model. Maybe it will be called M2. Maybe it will specifically cost $25,000 US. I think in that single line of the shareholder deck on page 10, they're saying, it will be less expensive than the average cost of a YR3 now. It will not be $25,000. And so now we go to the big picture. Clarity, how many of these things will you build? And what is the strategy with that vis-a-vis robo-taxi? Because they all occupy the same physical production space in Austin, based on our understanding. I also would think maybe the tone of Elon Musk, Tim, to answer your question.
Yeah.
I thought he'd be a bit combative and frazzled.
Yeah.
Now I just don't know.
Wait, we're surprised by something with Elon. All right, Ed Ludlow, we're going to let you go because we know you've got a full plate to continue. But of course, Bloomberg Technology co-host Ed Ludlow. But we got to talk about, with Max, final minute here or so, Elon bingo? Tesla
right.
bingo?
You know, again, I talked about this 3 months ago. This is a thing that many Tesla watchers, bulls, bears, everybody in between, Elon Musk super fans, Elon Musk's haters tend to do, which is to kind of create a bingo card and look for some of his catchphrases. So we at the Elon Inc. podcast, we've got a new episode out right now, and we have this bingo card. Just want to flag a few items. Horse, that would be 01. Now, Elon Musk has said that anyone who's driving a non-autonomous car, not a robotaxi, it'll be like driving a horse compared to a car. So see if he tries that line on us.
Horse drivers out
a few
there.
others. N2, Grok. N4, reasonably optimistic. He's often reasonably optimistic about lots of things. So yeah, lots of fun to be had here, and we'll see if anyone gets bingo.
It's a fun card.
Hopefully we get you back in
Yeah.
3 months, and also earlier than 3 months. Be sure to check out the Elon Inc. podcast wherever you get your podcasts. That's Max Chafkin, a columnist for Bloomberg Business Week.
Hey, coming up, we're going to talk a little bit about the Everything War. This is a new book out by Amazon. But in the meantime, let's get another check on some of the news after the closing bell. Here is once again the one and only John Tucker.
And of course, stocks rallying in today's session. The S&P 500 closing up over 1%, up 1.2%. We're at 5070 on the index after yesterday's rally as well. The Dow Jones Industrial Average closing up 263 points. That was a rise of 0.7%. The Nasdaq Composite Index, the tech-heavy Nasdaq Composite Index, ending the session up 245 points, a rise of 1.6%. And of course, it was the earnings report everybody was waiting for after the close. Tesla opening its books, revenue and earnings trailing estimates. The company did say it was accelerating production and sale of more affordable electric vehicles. And that looks like what investors have latched onto. After hours trading, the most actively traded shares of Tesla right now, they are up 4.9%. 9%. Texas Instruments, they reported after the close, giving a bullish revenue forecast for the current quarter. That indicates maybe the slump in demand for industrial and automotive components may be easing. Among some of the other stocks on the move, Goldman Sachs shares, they rose 1.6% on the day, hitting the first record since 2021. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
A little busy.
And Carol.
Yeah.
You guys did a great job.
Thank you. It was
That
fun.
was awesome.
It was an interesting quarter. And I feel like more to come.
We don't even know about the call yet.
You know, and I've driven a horse, and I can say I prefer horses.
Okay.
And buggy.
And buggies. I don't drink
right.
or drive.
All right. Well, good to know. All right. John Tucker, of course. Hey, we want to get to a company everybody knows so well. It's the largest online retailer in the world, touching seemingly every aspect of our lives, certainly my life. Retail, groceries, healthcare, entertainment, home security, logistics, and the cloud infrastructure that makes up the backbone of the internet. We are, of course, talking about Amazon, the nearly $2 trillion company that actually would get earnings next week.
Critics, though, have also argued that Amazon is also a monopoly. And last year, the FTC filed a monopoly lawsuit against Amazon in what may become one of the largest antitrust cases in the 21st century. A new book out today chronicles how Amazon got to be where it is today to become one of the most feared companies in the world. Dana Mattioli is a senior reporter at the Wall Street Journal. Her new book is The Everything War, Amazon's ruthless quest to own the world and remake corporate power. Dana joins us here in the Bloomberg Interactive Brokers studio. Congratulations on the new book. It starts with Lina Khan's Amazon antitrust paradox. And this was the Lina Khan pre-FTC. This was like 27 years old, Yale Law. It's an article, but it is so instrumental in looking at Amazon's monopoly power. Explain why that is.
Yeah, she was a relative unknown at the time, and law review articles typically have a small base of readers. This one goes viral, and it's the first time that people start to piece the words Amazon and monopoly together in the same sentence. This was a darling of the company. People love their Prime. They just associate it with fast and free shipping, and she starts to call out behavior she sees that she thinks are unintended consequences and a change in the way antitrust was being enforced, and she thinks that Amazon is this digital Gilded Age baron.
Well, when we think about it, right, you go back to those barons, right, and who really just controlled industries, right, no competition, if you will, a Standard Oil and others. And it is interesting because, you know, Dana, I always think about Amazon, what they started with, right, and books, and it sounded so innocent and just kind of, you know, it's become so much a part of our world. I mean, I know in our own home, it's like we buy something, but let's go check on Amazon, first of all, what it's going to cost and, you know, how quickly we can get it. I mean, it's become so entrenched in our life. Talk to us a little bit more about, you know, what Lina Khan had to say and how you wanted to kind of explore that.
Yeah, so Lina's paper says that Amazon's almost become this utility. It's unavoidable, not just for consumers, but for competitors. It's become like this highway to get to the internet through AWS, and sellers need to be on the website to sell because so much of e-commerce takes place there, 40% in the US. And she was saying that just because at the time Amazon was known for low prices, which was the way that was like the litmus test for antitrust enforcement and during this period, it didn't mean there weren't other things that were happening like tying or predatory pricing or other behaviors that would have been criticized or enforced in different regimes of antitrust enforcement. And from there, her career just really takes off. It's this truly meteoric rise. She's 27 years old at the time.
That's amazing.
She is now the youngest chair in the FTC's 100-year history, and she's regulating the exact agency that is in battle with Amazon.
And as you note, that there is a lawsuit, a monopoly lawsuit against the company from the FTC. It may become one of the largest antitrust cases in the 21st century. How do you envision that playing out?
It's a really interesting one. The FTC's lawsuit is about Amazon raising prices on consumers, which is much different from the article she first penned in 2017, where she said that they were predatory pricing. But in the interim years, the case is that, you know, Amazon was building a monopoly. They had to undercut the market to gain market share. Today, they have that monopoly, and they're able to charge monopoly rent. You could start putting all these fees on their sellers because they know they have to be there, and that's the iteration we're at right now, where these sellers are being compressed, their margins are being compressed, and they're being forced to raise their prices on consumers, meaning that consumers pay more.
You know, is it akin to, and we're going to take a break in just a moment, but and maybe we just kind of plant this idea, but this akin to something like, you know, a Walmart or one of the big box retailers and what they've done to small business kind of on Main Street. Is it kind of like akin to that in terms of what Amazon has done? Like, you know, these smaller sellers have to be on their platform, but it's not easy for them.
Yeah, if you look at the last few decades, Amazon's almost become like the 1990s boogeyman that Walmart was to Main Street.
Yeah.
But it's been replaced with Amazon and their effects, not just on Main Street, though, in other industries as well.
We're going to continue the conversation. We do have to do a little bit of news, but we're going to come back with Dana Mattioli. She is a senior reporter, Wall Street Journal. Her new book is The Everything War, Amazon's Ruthless Quest to Own the World and Remake Corporate Power, which reminds us of the Everything Store that our own Brad Stone wrote that really kind of, again, just reminded us of how Amazon was into so many things. Quick check on Tesla.
Yeah, shares higher right now by 6.3%. Still waiting to get some more detail from Elon Musk and co. on the call. The company will accelerate the launch of more affordable models. First quarter profit and revenue and automotive gross margin, Carol, all missed estimates.
Yeah, and the headline on our story, accelerating that launch of that cheaper car. And I think that's, again, as we've said, we want some clarity and some context and really some idea of exactly what that means.
More with Dana Mattioli in just a few minutes. First up, though, a check on the latest world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Senate has enough votes to advance that $95 billion package that provides funding for Ukraine, Israel, and Taiwan. The package includes a measure that would force ByteDance to divest its ownership of TikTok or face a ban in the U.S. Senate Majority Leader Chuck Schumer.
Today's outcome yet confirms another thing we've stressed from the beginning of this Congress. In divided government, the only way to ever get things done is bipartisanship.
Senate Majority Leader Chuck Schumer. Columbia University's main campus has switched to hybrid learning for the rest of this semester because of protests over Israel's war with Hamas, roiling college campuses across the country. University officials say they based their decision on ensuring the safety of students, faculty, and staff.
Just hard to see that we have reached such a point where we can't talk to each other. We can't interact in normal ways that we should be able to interact.
Students have been protesting Israel's war in Gaza at many campuses in recent weeks. The judge did not issue an immediate ruling, but it does look like Donald Trump may be found in contempt of court for social media posts that may violate a gag order, as the New York judge overseeing his hush money case characterized arguments by the former president's lawyer as, quote, silly. Now, later during a court break, Trump took to his Truth Social platform to knock the judge, called him conflicted, and accused him of taking away his right to free speech, and then he demanded the judge recuse himself. Wall Street Journal reporter Evan Gershkovich will remain jailed on espionage charges until at least late June. A Moscow court rejected his appeal today that would have ended his pre-trial detention. The U.S. government says Gershkovich has been wrongly detained. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks rallied today. The S&P 500 ending the session up over 1%, and it was the earnings report that we were all waiting for after the close. Tesla opening its books to investors. The earnings and revenue trailing estimates, but they did say they're accelerating production and sale of more affordable electric vehicles, and that's seems like what investors have latched onto. Most active aftermarket shares right now are up 7.1% for Tesla. In the meantime, Steve Chivarone at Federal Rated Global Investments says, you know what, stocks are the place to be right now.
And with the market repricing higher, bonds aren't all that attractive here in a rising rate environment. So you look out, the economy's still relatively strong, the consumer's hanging in there, earnings are doing okay. How do you not want to own equities?
And after the bell, Texas Instruments delivered a bullish revenue forecast for the quarter, indicating slump in demand for industrial and automotive components. That could be easing. Some of the other shares that were on the move, Goldman Sachs, that ended the day up 1.6% to hit the first record since 2021. Just to recap, S&P 500 ending up just about 60 points, a rise of 1.2%. At 5,070 on the index. The Dow Jones Industrial Average was up 263 points, up 0.7%. The Nasdaq Composite Index ending up 1.6%, 245 points. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. I don't know, who wants to take it? Tim, are you pointing back and forth?
Thank you so much, John Tucker. We appreciate that. Hey, I want to get back to our guest, Dana Mattioli, senior reporter at the Wall Street Journal. Her new book, The Everything War, Amazon's Ruthless Quest to Own the World and Remake Corporate Power. Dana, one thing that caught my eye was a story recently about Amazon coming out and saying, okay, we're now making this small announcement, announcing unlimited grocery delivery for $9.99 a month for Whole Foods. On that news, we saw shares of Instacart fall by more than 7%. We also saw shares of Walmart fall by more than 1.7%. Talk a little bit about how that relates to the idea in your book of a company amassing so much power that just a little announcement can cause destruction in shareholder value of competitors.
This is a very long-running theme. Anytime Amazon even files the slightest patent or makes a hire from another sector, Wall Street makes very vocal bets on Amazon's ability to just dominate ever-new industries. There's a whole scene in the book where CVS is buying Aetna because they're worried about Amazon getting into the healthcare space and taking their pharmacy business from them, right? So this is something that CEOs are on really high alert about, and Wall Street doesn't really give the incumbents the benefit of the doubt here.
I'm thinking about this, and Amazon is what now? Roughly a $1.8 trillion market cap company. Apple's a lot bigger. It's about $2.6 trillion. What is it about Amazon that just puts it in a whole different category in terms of some of the concerns that you cite in the book? And how was it allowed to kind of get here? Because it's pretty amazing how many different walks of our lives that it's involved in nowadays.
Well, I think it's pretty telling. All the major big tech companies are now the focus of antitrust lawsuits, and there's been this change in attitude toward them after the techlash. I would say while Apple is obviously ubiquitous too, like we all have iPhones, right? Amazon is unavoidable in some respects. I mean, they underpin a lot of the technology we use. I took a lift here. They're on AWS. If you watch Netflix, they're on AWS. In the middle of reporting the book, they bought my doctor's office. They bought One Medical, right? So even if you're trying to avoid them, they've now had their tentacles in so many areas. And I think that, analysts are on high alert to see where they're going next.
Is it harmful to consumers, though?
Right.
The FTC says it is. That's the focus of the lawsuit. They say that Amazon has raised prices for consumers, not just on Amazon, but in the entire online economy because of their outsized power in online shopping. And in addition to the prices, 60% of what is sold on Amazon is third-party sellers. And there's some great ones out there, but there's also been instances of really dangerous products on the website that I think a lot of customers aren't, hip to. There's things like carbon monoxide detectors that don't detect carbon monoxide.
No, it's interesting that you say that. There was something my husband and I were looking at, and I'm like, John, I don't really know that company. Let's check it out, because there's a lot of listings. My view, don't judge me, but there's a lot of junk I feel like, that's also on Amazon. And I feel like, have these companies been checked out? In other words, their reliability.
There's not very much friction to sign
Just one
up.
perspective, one view.
Yeah, there's
before I get hate
fly-by-night
mail.
sellers, and it's a game of whack-a-mole. Even when they do shut them down, they pop up with a new name or a new address, and it's really hard to rid a platform with just that many sellers of all the bad actors, which does lead to people buying dangerous products.
But it does make you, what's the responsibility, right? This is this big, broader conversation with all of these social media companies and these companies that have, so many users, right? That you do wonder about the responsibility of trusting the platform when you're on it.
And that's the exact focus of the CPSC right now. They're looking into whether Amazon has shirked their responsibility in regulating their website, and there could be a ruling on that.
And just because I'm going to get hate mail or called in by my boss as junk, and I mean by junk, I don't really mean like, I just mean that questionable maybe sources and stuff. And as a buyer, yep, I can read reviews, but it's also like there is, I think, an understanding that you're on this website that you think a lot of it is trustworthy and that it's been vetted in some ways.
I mean, my colleagues at the Wall Street Journal had a big story a few years ago about how some of these third-party sellers were literally dumpster diving and reselling trash. That wouldn't really happen if you walk into your Target.
Not such a bad word.
Carol, I think fair to say you're in the clear. You interviewed hundreds of people, Amazon executives, competitors, small businesses. Talk a little bit about what you found over the last few years and how Amazon got to this place.
Yeah, they are this behemoth of a company with unprecedented reach and access to data and leverage because of how big they are. So if you look at how they started, it was this online bookseller. No one even knew how successful it would be. I think it was a surprise to Jeff, including Jeff. There's a scene in the book.
They didn't make money for it. They weren't
No, they had
profitable
a
for
free
a
pass
long
from
time.
Wall Street for a very long time, which helped them get to where they are. And there's a scene in the book that in the first few weeks after it launches, one of their employees is a little bit nervous. He says, what's going to happen to like Elliott Bay, this beloved Seattle bookstore? And Jeff's like, oh, we could never get rid of Elliott Bay. People love it too much. And to his credit, that's still there. But think of the compression of the rest of the bookstores in this country. It's like been a very steep decline. And he wanted this to be a daily habit, and I'd say he more than succeeded there. So just beyond retail, it's the largest cloud computing company in the US, the biggest parcel carrier. It's a Hollywood studio, a podcast maker, a healthcare giant. I mean, and it's going into ever more places. There's a scoop in the book that Andy Jassy, the current CEO, in the midst of regulators saying you're too big, is saying we could be a $10 trillion company in 10 years. I mean, that's pretty telling that they see that much more space ahead of them.
You know, Apple, we talk a lot about that by having this closed network, it makes it kind of almost a seamless experience. And that is a benefit for consumers, right? They argue that. Is there something that just by being big, making it evil and so entrenched? Or is it somewhere maybe on the other side that it actually is something that's helpful, whether it's, getting health care to people who wouldn't normally get it? Like, I'm trying to understand what the flip side might be of building this massive infrastructure and massive network.
Yeah,
Playing devil's advocate a little bit.
Yeah, I don't
just trying
think
to
big
see.
is necessarily bad. I think it's how you use your bigness. And the book does get into some tactics that Amazon has used and predatory behaviors, the patterns of this that have played out that have caused people to question how they're using their power.
You didn't interview Jeff Bezos, but he did answer questions based on representatives from Amazon. What was their pushback on the points that you raised in the book?
I think most of it was off the record, so I can't get into specifics, but I did a full fact check of the book. This was not, a product of Access journalism by any means, but I spoke to more than 600 people. I spoke to 17 current and former S team members. Those are the highest ranks of the company that had reported to Jeff or Andy Jassy, and 5 current and former board members, so it's very well reported out. And I had hundreds of pages of internal documents and emails and the like.
What's the thing that's going to be kind of on your radar as this plays out? Just got about 30 seconds.
Yeah, well, the FTC lawsuit won't go to court until 2026. And, I think that could
It's a while.
It's a while. And I'm curious to see what Amazon does in the interim. Funnily enough, a few weeks after the lawsuit was filed, there was an Amazon All Hands meeting that I had a video to. And their general counsel was asked his thoughts on the lawsuit. And he got on stage and he was like a bit dismissive. He said, haters are going to hate. We're going to shake it off. Taylor Swift there. So I think that's his everything.
Taylor Swift is in everything.
Yeah.
She really is.
She's not on my playlist, not that latest album.
I bet you can find it on Amazon Music, though.
Other stuff I like. Great. So much fun to have you. Dana Mattioli, she's senior reporter at the Wall Street Journal. Her new book, The Everything War, Amazon's Ruthless Quest to Own the World and Remake Corporate Power. Amazon, by the way, reports earnings April 30th.
company news headlines on Bloomberg Radio.
And I'm John Tucker, the newsroom. We'll look at some of the company stories. Of course, we got to recap Tesla soaring in the aftermarket after the electric vehicle giant led by Elon Musk said it will accelerate launch of more affordable models. It did report worse than expected profit, the stock halting a 7-day plunge that drove it to oversold levels. And of course, we'll say it for the umpteenth time, Tesla is the first of the so-called Magnificent Seven cohort
It's
of
pretty
stocks
magnificent if
to
you're a bull
report.
right now, right?
Is this a group effort? Signs. I'm kidding. Signs of a comeback. Texas Instruments delivering a bullish revenue forecast for the current quarter, indicating that a slump in demand for industrial and automotive components could be easing. The company said sales of the period going to be as much as $3.95 billion. The report suggests customers have begun to resume ordering chips after working through stockpiles of components. So that's a pretty good sign for the broader industry, we can say. Big name in the delivery business launching a new delivery service today. We were just talking about Amazon. They now have a grocery subscription program in 3,500 U.S. cities and towns. It lets Prime members get free delivery on orders of at least $35 for $9.99 a month. People receiving SNAP benefits and get the service for $4.99 a month and don't have to be Prime members. Amazon's announcement did slam the stock and grocery delivery company Instacart to the tune of just about 7%. Do you get groceries delivered?
Sometimes,
Yeah, we do.
My husband,
90% of the time of our grocery shopping is delivered.
And you like it?
All of ours is for the
All right,
most
I
part.
may have to go that way.
Yeah.
Anyway, that is
John, technology.
a look at your company news. Thank you, Carol.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week. More to come in just a moment. First up, a quick check on world and national news. Over to Amy Morris. She's in D.C. Hey, Amy.
We're going with Doug right now. We're going to go with Doug.
Oh, why is that in there?
No, it's not. It's not in there.
It's
I
not
think
in
you're
there.
looking. I think you're looking at the wrong.
No,
I think
it's
you're
not.
looking. I think you're looking at the wrong. I think you didn't scroll down,
It's
Carol.
right here.
All right. Well, I'm going to talk to Doug.
I know how to read.
Okay, I'm going to talk to Doug. That voice you hear is Doug Krisner.
It's in there.
That voice you hear is Doug Krisner right
Sorry,
now.
Doug. I'd much rather.
That's all right.
I like
Bloomberg
Amy,
Daybreak Asia.
Yeah.
We're, of course, I'm guessing you're going to be talking about Tesla.
We're going to
earnings,
talk
but-
about Tesla. I mean, we know that they've cut prices in China, but the other story I think that's significant, although it wasn't an after the bell story, this big drop in iPhone sales in China. Did you see that?
You know,
Go ahead.
we did see it. We didn't really cover it.
Well,
a
by the
lot,
time we
but-
were talking about it,
Yeah.
I woke up this morning. I thought that was a huge story.
It's a big deal.
And then I woke up this morning, and everything's higher.
So there's been a lot of optimism about Apple sales on of the iPhone X China. I don't know how the company manages this. It was yesterday, I think, that Bank of America called Apple its stock of the year. Today, the stock was up in the regular session by 0.6%, but they're obviously facing major headwinds. Tim Cook was in Asia last week. He was in Vietnam. He was in Indonesia. And when he was in Indonesia, I guess they had a developers conference, may have been in Bali. And one of the things he was asked is whether or not Apple would consider relocating some production in Indonesia. He said that they would study that. So they're going to obviously continue to diversify themselves out of China. But look what's happening. Huawei, 70% increase. So obviously Huawei is starting to go after a lot of the market share that had been dominated by Apple.
A lot more choices. This is like,
Many more,
right?
many
So
more,
you
yeah.
do wonder. I don't know, this whole idea of Apple being a premium brand and that, high-end consumers in Apple are going to still, in China are going to still want to buy it. I don't know if that's really the case.
Well, it's the Tesla story. I think Dan
It
Ives
is.
put this very well about a week ago. He said, when you look at the China story, look at Tesla.
Yeah.
When you're looking at American businesses exposed to the Chinese market, it's Tesla and it's Apple. And look what we're seeing.
Yeah.
Hey, Doug, we spent a good portion of our show during the 2 o'clock hour talking about the Senate advancing Ukraine aid TikTok divestment bill in the key vote this afternoon.
It's going to break sometime. We're expecting, I just got off our production meeting. We're expecting a vote between maybe 9 and 10, so we'll have that included in the show tonight. Obviously, this includes the TikTok legislation, which Biden said he would sign. TikTok management saying that they're going to fight this in court. But the other thing that the bill contains is sanctions, secondary sanctions, we were talking about this yesterday, potentially given the sale of Iranian crude oil to China and whether or not Chinese banks could be exposed here. Now, Antony Blinken is in China this week, and I know that's going to come up for discussion. But that would really be, that's going to anger Beijing a lot if that were to happen.
Yeah. Absolutely. I mean, it just, I don't know. I don't know what's the end of all of this back and forth here. And the tensions seem to be increasing and the restrictions back and forth. I don't know.
Yeah. And let's not forget, China, Russia as it relates to Ukraine, because you mentioned the foreign aid bill. Yep. It's U.S. support of the effort to support the Ukrainian military effort against Russia. That's a part of this bill as well.
I'm just going to go back to phones. Did you guys see the story, Polestar joining the EV tech crossover with the made-for-China smartphone? Like these companies that are seeing that the car is now more technology and you want a phone that...
It's an extension of the phone, right?
So you understand...
Phone with wheels.
It's just interesting, all the different companies that are getting it.
What about that Apple car?
What about it? Everything.
Not going to happen.
Yep, we'll see.
No, they pulled the plug.
Not going to happen, Carol. Not going to happen.
Never say never.
Okay.
Never say never. Just interesting times.
So foreign aid bill will be all over that tonight.
Yeah.
With the Senate vote.
Yeah, right. It's supposed to go into the wee hours a little bit, I guess.
I hope not.
Oh, sorry.
We're hoping sometime between 9 and 10.
Well,
but we don't know.
I think lawmakers are hoping that as well.
Me too.
Yeah, the earlier vote went pretty quickly.
Yeah.
We'll see what happens. Are we done?
Get the wine, the Mexican food.
Are you done? That's the question. I think you're ready to toss to the newscast.
I am ready to toss to anybody who wants to take it. All right, looking forward to Doug over the next couple of hours. That's going to do it for Tim and me, folks. Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
The Senate advances the $95 billion foreign aid package, putting the bill on track for final passage late today. We'll have more on the difference it could make in the war in Ukraine with Melinda Herring of the Atlantic Council.
We'll also discuss Israel's ongoing war with Hamas and recent anti-Semitism on college campuses with Democratic Congresswoman Kathy Manning of North Carolina.
Plus, President Biden campaigning today in Florida, focusing on the issue of abortion as Donald Trump spends another day in court in New York, where the judge in his hush money trial heard arguments as to whether he's violated his gag order. Kaylee, we wait for news on that as we watch closely what's happening today in the Senate. They could be pulling the cots out tonight, as we understand it could be a late night. Then again, things have been moving pretty efficiently today, considering the number of delays that could have been had in passing this bill that will bring funding for Ukraine, Israel, Taiwan. We've got TikTok attached to this. They were all passed in separate chunks in the House.
Yep.
And now it's one big vote, full smash tonight.
Yes, and it got massive bipartisan approval in terms of the test vote we saw earlier today, the so-called cloture vote. It's all procedure, but it sets us up for what is very likely to be passage late this evening and a victory for the Democratic Senate Majority Leader, Chuck Schumer, who took to the Senate floor earlier, urging lawmakers not only to move quickly on this legislation so the president can sign it, but also talking about how significant this moment is.
We have a choice. We can either make a down payment on defending our security or finding ourselves on the back foot, facing much graver threats in years and decades to come. The only answer is the right one. We must act now.
For more, we're lucky to have Bloomberg's Mike Shepard with us in Washington. A big moment today. Mike, we can probably forecast what's going to happen in the real vote here based on what we saw in the cloture vote. More senators voted for this with the TikTok additive than did with just the funding for our allies than the bill that passed in February. What does that tell us?
Well, it tells me, and it should tell the rest of Washington, that they are sensing the urgency of the moment. They're looking at the situation across the Atlantic in Ukraine with increased concern. And they're realizing that if they don't act now, it may at some point become too late. And they really want to make sure that they are getting ahead of whatever may await Ukraine and the government in Kiev.
And of course, it seems that the House Speaker, Mike Johnson, also finally understood potentially the gravity of the situation, or at least that's what he signaled once he had seen intelligence, is what pushed him to finally